Hello, and welcome to the first episode of a new show that I'm bringing to multiple social media platforms called The Next Shift. The Next Shift is going to be a show which covers the employment market, not just in the UK, but globally, talking a little bit about some political musings which might be affecting your future job search, the security of your job right now, and anything you might want to know about if you're looking to further your career in the future. My name is Jake Appleton. I run a global aerospace defense and space recruitment service, and today I wanted to focus on one thing in particular, and it's the Employment Rights Bill and why that's stopping you getting your next job. If you see me looking down a lot during this video, it's because I'm looking down at my laptop because there's a lot of legislation to run through that I need to translate into something which is digestible and sort of useful for anybody watching this. But the Employment Rights Act is a UK bill. It's probably the biggest overhaul of employment law in my lifetime, certainly in the last few decades. It introduces stronger protections for workers whilst placing greater obligations on employers. It's something we've known about since last April, but it's a staggered sort of bill over the next few years. In simpler terms, the whole point of this is that it's a phased workers' bill that has brought a bunch of changes in that aim to make you feel more protected and more secure in your position and more empowered in your role as well, whilst having more legal rights from earlier in your onboarding. So what do those changes look like? Well, there's a litany of new rules, and I'm going to go through them one by one because you may have not heard of any of these. So the first one, and the most important one here probably, is the unfair dismissal changes. In particular, you are being protected after 6 months now rather than 2 years into your service. We'll get into what that means for job searches further down the line. A big change is the one to day one rights, which allows you to have immediate entitlement to key rights, including statutory sick pay, paternity leave, unpaid parental leave, and bereavement leave. A huge change that has come into play that in particular disproportionately affects young people, the changes to 0-hour contracts, meaning that workers will now have rights to guaranteed hours based on regular working patterns from other staff in the operation, plus compensation for short-term notice shift cancellations or changes, which effectively eliminates the zero contract market altogether. Fire and rehire policy will be changing as well, meaning that employers will face stricter limits on dismissing staff to impose less favourable contract terms. That's basically asking you to take a pay cut. Despite all the discourse in the government right now about productivity and return to work, this is a big one. The flexible working routine that you may have in your business is now a day one right, meaning that you don't technically have to be in the office during your onboarding if you do have remote days that are of access to you during that time. Trade unions have been strengthened. Workplace harassment rules have been strengthened. Claims to unpaid wages and holiday pay have also been strengthened. So all in all, it's a very productive, very progressive, pro-Labour-centric bill that aims to bring the UK up to European standards that we've seen by counterparts in years gone by during a time of somewhat economic volatility. So this all obviously sounds great. It all sounds very progressive, and yes, it absolutely is, if you're already in a job. Unfortunately, there's a lot of context here, and that is that the UK is currently facing an unemployment epidemic, in particular for young people. It's similar to the levels that we saw in the 2008 financial crash and other bust eras such as the late 70s. There are currently over 1 million people in the UK aged between 16 and 24 who are currently classified as NEET. NEET stands for Not in Education, Employment or Training. And if that number sounds high, it's because it is. It's over 1 in 10 young people. It's up 100,000 people in a single year and up over 250,000 people just since the pandemic. The economic impact of this is colossal, and for context, it's about double the brand new defence spend plan, which has just been announced this week. Not sure when this is going out, but on the 29th of July it was announced. It's about 4% of our annual GDP as well. But the scariest part of all of this is that it's creating something called economic scarring. Scarring refers to lifetime earnings and reduced productivity. Of the £125 billion, £63 billion of it will be lost in long-term impact of being NEET. And so, reviews estimate that today's 24-year-olds who are currently NEET could lose up to £300,000 in lifetime earnings, even if they later return to work due to lower wages, interrupted career progression, and reduced skills development. They're unlikely to breach that gap. So now I've just addressed all the context there. Why would a law change that promotes and protects UK workers be such a bad thing for an economy that is tanking under the pressure of its own youth welfare? Well, in simplicity, it's about caution, it's about trust, timing, and declining sectors that are historically strong for youth employment being most affected by this. In April 2025, there were tax changes that came in that dramatically increased the cost of employing particularly entry-level young people within smaller businesses. There were employer national insurance increases that tallied to about 1.2%. There were NIC thresholds which were reduced for employers by £4,100 per year, meaning that employers had to pay a larger proportion of national insurance too. The national living wage also increased, and the figures attached to that meant that before any inflation or any hikes to products and their supply chains, the UK or the average UK employer would be paying an extra £800 per year per employee. Businesses obviously immediately restructured their recruitment plans because they became more cautious, in particular small businesses, retail, and hospitality, which are the three main areas of youth employment. And when employment becomes that much more expensive, employers typically have 5 options, and they can pick multiple of these. They'll either hire fewer people, they'll delay recruitment, they'll increase automation, they might ask staff to do more work, or they might raise their prices. And so if we quickly run through that list, if we start with the raising prices, employers couldn't really raise prices because cost of living in the UK suggests that nobody can really afford anything right now anyway. Not all employers have the capital to invest in automation, nor does it necessarily apply to them right now. Staff that were already being worked ridiculous hours couldn't be asked to then do more. There's just not that amount of hours in the day. There's not that productivity available. So what do they do? Well, as we are seeing, they've taken option 1 and they've taken option 2. They delay recruitment and they hire fewer people. So we've now created this weird, cautious environment that nobody really knows what they want to do about their recruitment and growth. So employers were looking to rebuild their trust in an establishment that has kind of just given them a kicking. Instead, the government, in a far more conservative move, kind of responded by saying, if you're not looking to hire anyone, then I'm afraid we're going to make it increasingly difficult for you to get rid of anyone. And yes, it's really hard to argue that increased employee protections are a bad thing, but it's naturally not going to be the thing that reignites confidence in that employment market. So I just want to tag something in here, and that is the difference between predicted employer behaviour and measured employer behaviour after something becomes law. So what I'm going to go into next is what I think is going to happen and some studies and reviews that have already taken place since April this year. When the Employment Rights Bill was announced and then passed as the Employment Rights Act, many employers began reviewing their recruitment strategies as early as 2024 because they anticipated higher employment costs and greater legal obligations. However, because many of the Act's provisions are being phased in through 2026 and 2027, it is difficult to attribute what the actual hiring trends are going to look like because each shockwave against each policy so far has been massive. And even though a lot of these policies have only just come into play, they've only come into play in April or maybe just before April, or some of the planned reforms have just happened just as April hit and it's only been a couple of months, we already have some interesting stats and some very credible surveys from very credible sources that have forecasted what's going to happen next. In particular, the CIPD found that 37% of employers expect to reduce permanent recruitment because of key Employment Rights Act changes. If there are over 260,000 businesses in the UK with more than 10 employees, and I have checked there are, and 37% of those 260,000 businesses plan to reduce their hiring by just one person this coming year. That's already 96,000 jobs that have been lost. Worryingly too, the CIPD have also warned that some businesses may substitute permanent recruitment with contingent labour to retain flexibility and reduce the impact of new employment protections. That's my biggest worry here, because as a recruitment business owner, we too have seen a significant rise and pivot away from permanent recruitment in favour of things like fixed-term contracts and temporary/hyper short-term hires. Now, as we've already sort of mentioned, that doesn't mean zero-hour contracts. It doesn't mean that we start increasing our utilisation of zero-hour contracts, but that means that the permanent job that you were going to be offered, that long-term position that you were previously offered, is now a 12-month or a 6-month or a 3-month fixed-term deal with just a likelihood of extension. And for young people, the likelihood of extension is not enough to be granted a mortgage. It's not enough to be approved on a loan. It's not even enough to allow you to forecast whether you can pay your rent this Christmas. If we really want to get into the granular detail of this, it also devalues hourly rate and daily rate contracts for those who engage in service work, as employers now have a wider candidate list of desperate professionals who need to accept one of these short-term fixed-term deals. Let's go back to my original point. Young people are struggling to find jobs, and British employers are struggling to find reasons to grow, to expand, and to take on that risk. Large enterprises will act as large enterprises do, and they will outsource their lower level jobs, they will automate, they will reduce probation periods, they will cut their costs, they will mitigate risks, and smaller businesses will continue to run to their absolute baseline. So yes, the Employee Rights Act is absolutely a necessary future-proofing of workers' protections in line with the rest of Europe, but it's been deployed at a horribly bad time for UK businesses. The interesting thing for a bill like this is that you can't repeal any of it without massive scrutiny. You can't announce that you're going to be getting rid of the ugly world of zero-hour contracts and then accidentally create an even scarier reliance on temporary workers and then reintroduce those unstable zero-hour contracts to recombat it. Similarly, you also can't tell people that you're going to remove their entitlement to sick pay now you've brought this in from day one. And you can't then tell people that they're going to lose their right to contest unfair dismissal. It's a lack of sort of joint up thinking which makes no sense to me here. The same government that is raising taxes on employment burden, then raising risk on employment within the same year just makes no sense for any policy adoption. And weirdly, the government usually pass through things like this so slowly due to their own administration problems. But here, you've barely given businesses a data pool of a year to understand how their bottom line is affected by previous changes before you've implemented new, heavier ones. So yes, employers won't directly point to this right now, certainly not publicly, because it does not play well in the media. But this is a major reason why you, as potentially a young person, are struggling to find an opportunity for a way into an industry and a chance to prove yourself. And unless gratuity is agreed within businesses and the central government departments at the moment that might be affecting them, the scarring of this will compound just as debts do. And on that happy, progressive note, this has been The Next Shift with Jake Appleton, and I'll see you on the next one.